morning, everyone. Apologize for not getting the Substacks out last week. I had a lot going on. Want to show you some things with the monthly mean on the ES for today. As you can see, price traded inside the monthly mean um, in May, and we've returned back to the middle of the mean precisely. Um, ended up closing on the line yesterday. So this is really important, the monthly mean. Um, it shows that the market is still in growth mode. We have not started the sell-off yet. And the algos know precisely where they are on, in fact, at the time of this bar close on, what day was that? Wednesday. I tweeted out that this is where we would expect to see the institutional buyers come in. And didn't get any responses really to my tweet, but that's exactly what happened. They came in and went right back up to the mean. So that's what you expect. To get an idea of how powerful this is, again, I keep showing you guys this, but you can measure these ranges. So the big volatility palooza of March 20 can be measured one time and half going from the mean to the 3, and that's precisely where the expansion went to outside that range. So we went one time and then it continued for a half. So one and a half. Look at that. And if you were able to jump in right there, then weren't you the billionaire, right? Gazillionaire, trillionaire. So knowing where you are inside these ranges is extremely important. And the algos know where they are because they know where these levels are and hit them all the time, especially on these larger distributions. Like, look, I mean, all you have to do is open your eyes and look. I'm not making this up. I don't draw these lines after the fact. They draw themselves. The algos know where they are, and I've got their number. It's like that song, Ricky, I've got your number. I keep playing it over and over. But that is the hardest thing to do is when you're in the throes of a sell, because believe me, all the algos were red, 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 red going into that level, and there I am sitting my tweet, buy, 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 and people just thought I had lost my little mind. Because you're going antithetical to everything that you're visualizing. Just like yesterday, I was fighting in the NQ, um, and the NQ was just unfortunately correlated too much to the ES yesterday and got caught up with those algos. I would like to see the bifurcation in those markets a little more, but they're not there. They correlate. So this is something on the 60-minute chart that you can um, really set your watch to. You can set these levels, and then when it trades up to your level, the 20 line, for instance, you can watch for that deceleration after it. So if the market is going to decelerate following a move, you want it to get to the 20 and then pull back. And then it's going to revert to the mean, that pullback in volatility. So this contraction means volatility is pulling back to the mean. Here we had an expansion, a little bit of a pullback, another expansion, a little bit of a pullback, and then a third expansion. And this third expansion, this part right here, this expansion was on positive volatility, and I tweeted about that last week or the last month. It was good to see positive long bars on long vol. And that was something that was very, very um, telling that these markets, these algos, companies or the institutions or the dealers or they, whoever they are, the algos, they are buying into our markets. They have not abandoned our markets. They were not ready to let it go back to our mean line. And do I have the mean line over here on all charts? Let me put this on all charts. Oops. It's a drawing tool object. Because that's where I think it's going to pull back. Where'd it go? Why didn't I get it? Definitely technology challenged. There we go. There it is. It's just way down there. So that's where I think we're going to pull back. So be prepared. Be prepared. When it happens, we're going to pull back to that mean and test it. And that was the mean of the March volatility palooza. It's at, that month's volatility mean. So that's our range. And we just got back to the middle of this range box. And so I think that the algos are committed. We saw the positive volatility coming in with expansion, and that's a first. So this little section right here, if that goes, if we break this pivot low, all bets are off. So this is our one little pivot line, this little hammer tail on May 13th. 60-minute hammer. We want to be watching that 40, 29, 25. So that's our line in the sand that we need to be watching like a hawk. Go ahead and put this on all charts. Okay. So we can, just flatten out up and down for a while, and I think that's what's going to happen. Um, so just be prepared to go flat. We have a lot going on. I think that is going to be demonstrative of flat. We're going back online. They are thinking that the inflation is transitory because of the capacity utilization rate being so low, meaning our factories are not anywhere near full capacity, very, very low capacity. But yet, our exports last week demonstrate that the money is flowing to those countries that enjoyed our transfer taxes from before. So we're sending the money to, or the exports to Ireland, to South Korea, to Vietnam. Those are the countries that the companies go to do their reincorporations, to do their transfer taxes, to avoid paying U.S. corporate taxes. So nothing has changed. And I think we're idiots for pursuing this. They should just lower the corporate tax rate to compete with our Asian and our Ireland rates. Keep our companies here so that we can get the benefit of that money, not pay every other country the benefit of our wealth. And if they can rethink that, keep the corporate rates lower, and hopefully bring some of those manufacturing companies back to employ our base. I mean, bring some of the supply chain back. We need some for just national security reasons. But I think it'll all work out for everybody if we just keep a balanced approach to this, bring a little bit of the supply chain back, and definitely with the corporate tax rate. So if you know anybody in Washington, D.C., and you hear my plea, hear this: nothing's changed. It's the status quo. Our money is being sent offshore again like it was before, and that's a crying shame. I mean, we need to change that. If we haven't learned anything from our lessons, um, then we are stupid, stupid, stupid. So pass it on up the stairs to Washington for me. Maybe we can do a little bit, our effort to, straighten out the economy, for us and allow that global growth everywhere, because all the countries have now gotten their free trade agreements together. I mean, the whole world is going free trade except for China. So I don't, understand that, but maybe they'll get on board with it at some point. They're either going to have to get on board with it or they're going to be left out of the cold. And there's only going to be like, they'll only be dealing with countries that are on the shit list, right? So I'm not supposed to be saying that on the internet, but I think that they do want to get into the program. All right, we'll see. Thank you so much. These moves, the PT2 indicator, going to be updated to calculate on the current session. Right now it's set to calculate on bar close. So working on that and a lot of other things. I mean, there was a whole long list. We are trying to get a VPS up to run an algo to walk forward test. We have uh, quite a few things. We're getting a volatility bar that we're going to be using with our strategies to automatically adjust to the volatility in the market. We are moving along with other things. We're going to get an indicator that is going to model bookmap with the NinjaTrader order flow tool for the some new indicators possibly, but there's a long list of things that I've asked my programmers to do. They're about ready to throw me out of a window right now, so please make sure I don't get thrown out of windows. And we'll see you next Saturday. Thank you so much. Y'all have a good day. Bye bye.